Hello, I'm Steve Dickey. I'm here to present some information about forest income taxes. This will be Chapter 12 in the taxes, called Taxes and Forest, the Family Forest Owner, as part of the Managing Your Family Forest textbook. This is originally written by Debbie Gaddis. We're here to start with explaining what is forest land that is defined by the U.S. government. Now, for income tax purposes, it's 1 acre or more held in the U.S. for commercial timber production. So if you own that 1 acre, you could qualify for many of the things that we're going to talk about today. Your duty as an American taxpayer is to apply the tax law to your facts and circumstances according to your forest land. And this is my caveat, tell you that sometimes what we tell you may be different than what your professional tax preparer tells you. If there's some kind of conflict, we'd love to talk to them. Most of the time, they might be right, because taxes are very, very complicated. The next slide shows you how complicated taxes are getting. Right now, there's over 70,000 pages of tax code that your tax preparer, you and I, all are supposed to know to apply that to your forest land. It's near impossible to keep up with this. Fortunately, we have what we call a tax site that's maintained by the University of Purdue, the National Timber Tax website. It's available to you for free, www.timbertax.org. We recommend you going to this site to have specific questions answered on your facts and circumstances on your forest land. I just told you that we hate to just oversimplify, but we're going to start with that. There's 4 things I would like to talk about today. One is, how can you deduct your expenses as ordinary expenses? And that'll be filing Schedule A for an investor, or Schedule C and F as a business. How can you claim your timber sales income as a long-term capital gains and get preferential treatment on your tax code? And that means filing Schedule D, whether you're an investor or a business. How you deduct your reforestation costs as ordinary costs, and also take advantage of that Mississippi Reforestation tax credit. And then finally, a little bit about how you exclude cost share from income. We get authority to deduct our expenses either as an investor or as a business, and we'll get into how you categorize yourself, which is better for you, investor or business. But there's sections in the tax code specifically for investors and businesses, how they're supposed to deduct their expenses. What we want you to know is you do not want to become a hobby or personal use owner of forest land. That's a person that does not intend to cut any timber, does not intend to make any profit. We want you to, if you're in that category, you get into a very restrictive on how you can deduct your expenses. So we're going to talk about how can you expect a profit, how can you prove to the IRS that you are expecting a profit. Here's an example of a pine plantation being managed, what kind of incomes we could expect from the timber sales. For example, we might thin at age 15 for $300, age 23 for $500, and a final harvest at age 30 for $2,200. That's an intent of profit. This is the amount of money you expect to make from a pine plantation. This is what the IRS is looking for. We also, because we do have economics backgrounds, and here at Mississippi State we have a program called ForVal, we can timeline your forest stand and show what it's growing over time in terms of its value as an investment. These things help the IRS decide that yes, you are intending a profit sometime in the future, and you can go ahead and deduct your expenses as either an investor or as a business. Now it comes to you. Which are you going to be, an investor or a business? Well, it depends on whether you enjoy life or do you want to pay less taxes. That's essentially the bottom line. An investor does not have to have a forest management plan, does not have to keep good records, does not have to keep a work record. Those things are going to be required as a business. If you don't have very many timber sales, and timber is not a very important part of your income stream, you probably are an investor and probably just go ahead and pay more taxes and enjoy life a little bit more. Here's an example of Schedule A where investor would be deducting their expenses on line 23 as what they call other investment expenses. And you subtract 2% of your adjusted gross income from this before it's actually deductible on Schedule A. Now, if you're a business or a farmer and you decide you want to do this because this is the most aggressive way of deducting your expenses, you'll be expected to have a forest management plan or a business plan showing your profit motive, what you expect. Keep good records of your work and all your expenses. Form T, which we'll cover later, will be required. Keep a separate checking account for your business, and you should have more frequent timber sales, and your income from these timber sales should be very important to you. So that's the definition of a business. Businesses are able to file their expenses on Schedule C or F, which is deducted on the front of your 1040, the most aggressive way of deducting expenses. So you'll pay less taxes as a business, but you'll have more rigmarole and more records to keep. The type of record keeping that we recommend, cash accounting. If you spent something this year, then you deduct it this year. There's other ways of doing things, but cash accounting is usually best. You need to keep a journal, and if you're in a business, you need to keep a ledger as well. Here's an example of a journal for a forest landowner, when they worked on their tree farm, when they read magazines, those kind of things. They're keeping track of their hours, they're keeping track of their costs, and these things will help them determine that yes, they're in the business, and yes, they have intent to make money, and here are their deductions for each year. I told you that's the first part. The second part is to encourage you to go after long-term capital gains as a tax rate for your timber sales. Long-term capital gains are extremely low. Those rates are extremely low compared to the ordinary income tax rates. All forest landowners are going to be eligible, and this also avoids Social Security and Medicare tax, usually. I'll talk about 2013, well, that will not be the case. Here are the current rates that we look at in 2012. We actually have a 0% tax rate on the first $64,000 of income for an forest landowner that sells timber. So there is a possibility some of our lower income forest landowners in 2012 will actually be able to sell timber and not have to pay any income tax on it. Once you get up into the higher tax brackets, the 25 to 35% ordinary income tax brackets, your long-term capital gains tax rate moves up to 15%. Requiring holding period is 1 year and 1 day at least to qualify here. If you're inherited, you don't have to worry about that. If it's gifted, your donor's time and your time is combined to see if you meet the qualifications. Here are the proposed 2013 tax rates. We don't know what's going to happen in 2013. You know, now it's October. We don't know what's going to happen in January, but this is what it is right now. We're looking at a 10% tax rate as the minimum for the lower income tax brackets and 20% for the higher income tax brackets. And then once you get somewhere around that $250,000, Obamacare adds another 3% of Medicare tax onto capital gains. So some forest landowners may look at a 23% tax rate in 2013 unless things change. Where do we report our income? Well, because there's two different tax codes, investors report one way, businesses report another. They both end up on Schedule D and get capital gains treatment of their income, but they just have to report it different, and they have different rules they have to follow. Here's an example. We have a new form called 8949 for investors. Fill that out for your timber sale and then apply that to Schedule D. Business owners fill out 4797, a sale of business property, and then transfer that to Schedule D. Both of them will get long-term capital gains treatment. So both of them will get up to that 0 and 15% tax rates. Form T is required with $47.97. So businesses have a higher expectation of keeping their records better. We'll cover Form T later on because I know many of you out there want to know about this. Just can't wait to learn about Form T. Here's an example of Schedule D. Both investors and businesses will end up on Schedule D. One will fill out investors 89.49, like I said before. Businesses fill out 47.97 and place their net capital gain there on line 11. So there's several ways that this thing can be reported, but everything ends up on Schedule D, long-term capital gains, and you save a lot of money. Mentioned Form T, we will get into this later, but basically any business that wants to claim a depletion on their timber, a deduction against their income taxes, or they make a timber sale of any kind. That's what a 631B timber sale is, a business selling timber. These are the people that need to file Form T. Three accounts that we need to set up, and we'll get into what we call basis here. There's timber, land, equipment, and building are your typical three accounts that we need to keep up with. Timber is the one we're going to talk about next. Why? Because this is a timber course. How do we establish basis in our timber? It's either inherited, that means it was given to us by someone that died through an estate, a gift, purchased, or like-kind exchange, or we planted it. Each of those have a different basis, and so we track those through time, and basis is carried for the life of the stand until we finally sell it. Here's an example of an inheritance. Someone that passed away, we get a step up in basis from that donor's property. So the donor may have only had $10,000 in their timber, but because the fair market value today at the time of their death was $100,000, our tax deduction from future timber sales is $100,000, not the donor's basis. The exact opposite is true if someone deeds property to you while they're still alive. If someone deeds property to you while they're still alive, that's called a gift. It's not subject to estate taxes, therefore there's no step up in basis. It's called carryover. What was the donor's money? How much basis did they have in that timber? That's your basis. You do not get to step up in fair market value from a gift. A purchase asset, the amount of money that you have in your basis is depending on how much you paid. The total acquisition costs is your basis. Now, acquisition costs, typically you buy land and timber together, and therefore it's tough to figure out how much goes into the land, how much goes into timber. There's many ways that people have done this, but there's only one way the IRS likes you to do it, and that's what we call allocation based on fair market value. And this is an example. Here, Elliott Slash purchased 40 acres for $70,000. That's how much money he has in it. And the fair market value from appraisals is $91,000, with $40,000 being in land and $51,000 being in timber. So that's the scenario that we're looking at right here. $40,000 in the land out of 91 total is 44% of the fair market value. That percent is going to be used to allocate basis in the land. So 44% of $70,000, the acquisition costs, that gives you a basis of $30,800 in the land. Timber represents 56% of the total value of this piece of property. 56% of $70,000 and $39,200. So this is how you allocate based on a percent of fair market value, the acquisition cost to determine basis. And this is Form T, page 1, the example of taking those allocations. $30,800 goes into the land. You had 40 acres. What we call the cost or depletion unit is $770 per acre, is what you have in the land. And the timber, $39,200, because we have 2,000 tons, that's $19.60 per ton is our depletion unit. See how simple this is? Yeah, right. That's why there's folks like me have a job. We can help you settle this out. We can help you deal with this. Because you're taking this course, you actually are now qualified to call us. We might be able to have some kind of conversation, how to set up your accounts and things. So I appreciate you taking this course so you can call us, ask intelligent questions. Here's an example of basis in case you forgot to do it when timely. A lot of people inherit timber and then they forget to do the basis, and 5 to 10 years later they say, oh, I need to find my basis because I forgot about it. Well, this is a very technical term by the IRS. It's called ungrowing trees. You can look right up on their IRS website, and ungrowing is the technical term, how to deal with trees that should have been determined what their value was 10 years ago, 15 years ago, and it just wasn't done. You can ungrow trees. We have an example here with Betula White. She inherited property 10 years ago. And we try to figure out what is the basis today in her timber when she inherited it 10 years ago. Well, the way we do this is we work the Form T backwards. This is page 2 of Form T, and you'll see there down on line 7, this is the current year. We have 5,000 tons of timber on this property. We need to grow it back 10 years. So what's 10 years worth of growth? We were told that we're getting 2 tons per acre per year, times 50 years, times 10 years. That's 1,000 tons we're growing in the last 10 years. So 10 years ago, 5,000, take away 1,000, we're going back up to line 2. We now only have 4,000 tons to the acre 10 years ago. Well, what was 4,000 tons worth 10 years ago? 4,000 times 25 bucks a ton, $100,000. Guess what? You just established your basis. $100,000. That's what the timber was worth 10 years ago. This is what we call the technical term of ungrowing the trees. If we bring that forward, we add in the consulting forester's fee, add that all in. At the end of the tax year, back down to line 7 again, we have $10,385 in our basis, or $20.08 per ton in our trees. Every ton we sell this year, we would be able to deduct $20.08. So that's how we figured this out, and that's how advantage you get on this. The next slide is just all the calculations that were done to make these calculations work out. Now, how do we adjust your basis? Anytime that we decide we're going to capitalize expenses and stick it into the account, we're adding to our basis. Anytime we do a timber sale or something like that, we're depleting, we're reducing our basis. So basis goes up and down. You keep these accounts for the length of your timber stand. So you're talking 30 to 45 years of keeping these records. It's very important to keep records. Step 3 that I want to talk about was reforestation. Reforestation is, these expenses are extremely high for a forest landowner, and there's a lot of tax incentives out there for a forest landowner to encourage them to reforest. So we're going to cover those here in the next. We have, for individuals, businesses, estates, on the federal side, you'll be able to deduct as ordinary expenses any reforestation costs. On the Mississippi side, we have a 50% tax credit, and then you'll be able to amortize, or if you have the guts, you can deduct it. I'll go into that in a second, what I'm talking about here. Trusts, on the other hand, cannot deduct their expenses. They have to amortize. That's right in the tax code. Trusts are a special case. So if you're in a trust, you can't deduct, but you still can take the credit. And if we have time, we'll talk about excluding cost share. Here's an example of what tax incentive we're looking at here. On average, if you're in a 25% tax code, you should be looking at 77% of your expenses being returned to you in your taxes. You'll get 25% back off BAM on your income tax deduction, 50% back BAM on the Mississippi Reforestation tax credit. In addition to that, you can amortize the remainder. 22.5% is what your out-of-pocket expenses are. This is a great deal, because if you have to spend 200 bucks, we're only talking about ending up with less than $50 out of pocket. on a $200 expense. Here's how the reforestation tax credit works. It's up to $10,000 a year, a lifetime limit of $75,000 per taxpayer or couple or partner. So this is an example of how much love costs. In this example, if you love somebody and you file together jointly and you hold your property jointly because you love them, it's costing you $10,000 a year. If you don't like somebody, you're holding your property different. You don't like your spouse and you're holding your property separately and you're filing separately, you each can get the $10,000 deduction each year. That's a price of love in Mississippi right there. Anybody's eligible as long as you own the property. Some of the requirements, it's one of the only documents that has to be signed by a registered forester in the United States of America. It's the only tax document I've ever seen that required a forester's signature. It's an awesome little document. What's reforestation costs? These are traditionally site preparation and planting, but because herbicides are so effective and they can be used in many different ways, we actually can allow pre-harvest site preparation. In other words, like if you had privet or Kogon grass in your timber stand and you needed to do it before the final harvest because you didn't want to release it, so there's pre-harvest site prep. Also, 1 year, up to 1 year after you plant your trees, you can also claim this on that 50% reforestation tax credit. So there's a lot of reforestation tax credit available to you. Just think outside the box, work with your forester, come up with a great plan, and work through the plan and take full advantage of this reforestation tax credit. Here's an example of a plan. You know, it's extremely hard to do. I'm going to burn, I'm going to purchase and plant some seedlings, and after I plant, I'm going to spray over the top of them with a herbicide. You know, this is, only a forester can do this kind of stuff, right? Now, a plan is very important. The reason they have a forester involved is because they want somebody to say, yes, this has been accomplished. Here's the example of that plan. It costs $9,520 to do this on 50 acres. We actually only planted 47 of it. So on that 47 acres, 95,20 is the cost. We're going to take the reforestation tax credit next. There's a limit to this. Of course, there's always paperwork on the back of this. On the second page of this worksheet for the reforestation tax credit, you compare what you spent to what the average cost is in Mississippi. So here we have the average cost of site prep of $38. Average cost of pine seedlings is $40 an acre. Labor is $50 an acre. Post-planting site prep's $85. You add all those together, the average cost in Mississippi was $10,125. Lucky this time, our actual cost was less than the average, so we can take a 50% tax credit on the entire amount. Here's an example of the reforestation tax credit form. Line 1, what you spent, compared to line 2, what the Mississippi average was, and the lesser of those two is what we can take 50% of, and in this case, it was a real 50% tax credit available to us. How do we recover these expenses on the federal side? We're going to deduct them as what we call a 194B expense, and again, trusts are not eligible for that 194B. Here's an unusual thing here. You're limited to $10,000 per property, not per taxpayer. $10,000 can be deducted per property. Y'all heard that, right? Here's an example of what a qualified timber property is. It's a property that as you define them. So if you have a timber stand on one side of the road and a timber stand on the other side of the road, that could be thought of as two different qualified timber properties. You're an American, you can figure this out. If you go over the $10,000 limit on a particular stand, you'll have to amortize, or if you're trust. And here's what we call an amortization schedule. Essentially, it's a deduction over 8 tax years. And so you take 1/2 of 1/7 the first year, blah, 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 end up 8 tax years, you'll be able to deduct the entire amount. Amortization is not that horrible. It's just more time consuming and more paperwork. So people like to avoid that kind of stuff. Going back to Form T again, we spent $9,520. That's under $10,000. So you can see line 4A here. We are taking the elective that we're going to deduct this on our income taxes, $95.20. You have to do this in the year it occurs. Otherwise, you do not get to deduct it. You won't get to amortize it either. This has to be done in the year it occurs. You cannot go back and do this with amended return. Here's an example of how to deduct it on line 36 of your federal 1040 form. So it doesn't go on Schedule A, it goes on the front of your 1040. Very aggressive way of deducting your expenses. Most software will allow you to do this. If not, I'm sorry. You have the right to do this, you just may not have the ability on your software package. Here's an example on how a forest landowner, as a business, would be able to deduct it on Schedule C. Cost share. We're on the fourth point now. We're getting close to the end. I just wanted to mention cost share because many people get cost share instead of taking the reforestation tax credit. Cost share complicates things because you have to make a decision. Are you going to report it as income or are you not? You get a 1099 in the mail, you're going to report it, but are you going to pay income tax on it or are you not? That's a decision you need to make. Well, if you decide to exclude the cost share from income, you have to subtract it from your total reforestation costs to come up with a net. So if you have a net, you have this net reforestation expenditure out there, that is where that's what you're going to take your deduction on. Sometimes it's not, you're just doing extra work and you're really not getting ahead by doing this. But some people it might benefit. So the bottom line is you get two choices with cost share. You pay the tax on the cost share and you deduct and amortize the full reforestation costs. Or if you exclude cost share from the tax, then you determine the net out-of-pocket expenses and then deduct or amortize the net reforestation expenses. How much can I exclude? Here's an example. You're either going to look at if you had a timber sale recently, you can look at the 10% of the property's 3-year average income. So if you had a timber sale on 1 year, you divide it by 3 and then take 10%. Take that number, or $2.50, divide it by the applicable interest rate, and the one that we go with is the Federal Land Bank in Texas, and the best rate that I've come up with from the Federal Land Bank is 6.04%. So if you had a timber sale in the last 3 years, you should be able to exclude all cost share available to you per acre. Here's an example, $165 an acre. Very rarely you're going to get cost share that high. Or $41.39 per acre would be your other limit using the $2.50 limit. Okay, in summary, let's go through the forms. Make sure you caught everything that we covered here. I threw a lot at you. It's always good to go over it one more time, what you're looking at as a forest landowner. Looking at capital gains. Schedule D is what you want to report your income on. Report your income on Schedule D, and if you're a business or an investor, you're going to have a different form that you put that income on as well to transfer as a Schedule D. In Mississippi, you're going to just file as a resident and ordinary income taxes will apply. Deduction of operation expenses, Schedule C or F if you're a business, Schedule A if you're an investor. We told you that Schedule A is kind of bad because you subtract what you spent, subtract 2% of your adjusted gross income before it's deductible. So it's a pretty high floor for some people in the higher income practices. In Mississippi, you have a different Schedule A, so investors actually have to file more forms here because Schedule A is different in Mississippi than the federal one. Reforestation costs, both of them are deducted on the front of the 1040. C or F as a business, or write-in on line 36 as an investor. Amortization is available on 4562, and cost share exclusion is just on a plain piece of paper. There's no form for that. Mississippi Reforestation tax credits on Form 8315, and deduction or amortization of remaining net costs are in Schedule C or F, or Schedule A as an investor. I mentioned that should we deduct our remainder as an investor? The Mississippi Department of Revenue, I keep wanting to say Tax Commission. I'm fighting myself here. The new name is the Mississippi Department of Revenue, has never made a ruling on whether an investor can deduct the remainder of their expenses here or not. But the code and their write-ups back in 2004, 2005 said you could amortize. We had big changes in the tax law, so if you're real hesitant, go ahead and amortize. If you're a little aggressive, deduct. I think you are allowed to deduct, but then you'd be just going by what Steve Dickey says instead of what the Mississippi Department of Revenue says. We have no confirmation that you can deduct here. Basis. IRS Form T is the very best form that we have available to you to record your basis on your timber and your land and keep those accounts. We recommend you using that Form T. Deduction of casualty losses. Didn't mention this in the program because this can be hours in length, just this program on itself, but use Form 4684 to file a casualty loss. And if you have a southern pine beetle attack and you're owning your timber as a business, you can actually do a business-only southern pine beetle loss as a non-casualty business loss. So that's available to you as well. Forms are available online at irs.gov or departmentofrevenue.ms.gov. With that, we will end today's program, and we do appreciate your attendance today, and call your county extension office if you have any questions, or one of our extension foresters. We'd be glad to help you with your income tax problems. Thank you very much.